Welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Shrikant coming to you live from India's Startup and Technology Hub, Bengaluru. And we kick it off then with an exclusive story that we broke earlier today. It's about the mega deal in e-commerce between Flipkart and Walmart. Now, even as reports were gaining ground of a big counterbid by Amazon, we have picked up from our sources that the board of Flipkart has broadly agreed to go ahead with Walmart for this mega deal. Almost the entire board of Flipkart has agreed to go with Walmart. That's what we've picked up from our sources. But it's important to mention here that a shareholder agreement is yet to be signed between both parties. From what we understand, SoftBank was the only investor and board member that wanted to go with Amazon. Remember, SoftBank has a 23% stake in Flipkart, but the rest of the board and all the important investors, that includes the likes of Tiger Global, Tencent, and all the others, they decided to go with Walmart. That's the update we have as of now. We have to mention here, this is a developing story, so things might change very rapidly. But as of now, we have confirmation from our sources that it's going to be Walmart all the way. There are two main reasons why investors and board members of Flipkart are more comfortable with Walmart. The first reason being that Walmart offered a cash out option vis-a-vis a share swap by Amazon, so an exit opportunity would have been easier for investors here. Secondly, the second big reason is that an Amazon-Flipkart combination wouldn't have passed muster with the Competition Commission of India, because combined they would have a market share of over 70%. So a Walmart-Flipkart deal looks more likely at this point. In fact, we are going to get in an expert voice on this. We have K. Ganesh, the founder of Growth Story, a serial entrepreneur and investor himself, joining us on the phone line. Sir, you know, this is the story we have as of now, that the scale is tilting towards Walmart and not Amazon. What do you make of it? Is Amazon still going to put up a strong fight, or is it more or less a done deal with Walmart?
So I don't have the inside information to be really able to comment on whether it's a done deal or not. No such deal is done till the time actually definitive binding legal documents are signed. And there are multiple investors and board members here. Inter say they will have shareholder rights, including certain veto rights that will give people the ability to be able to veto. So this has got to be something that has to be a consensus agreement they need to arrive at. From a competition commission point of view, the point you're making is right in terms of Amazon and Flipkart coming together would have more questions from competition commission. But given that the Flipkart is a Singapore-based entity, I'm not very sure about whether the competition commission really applies in the full section here. You'll have to consult the legal expert. But based on what I'm hearing and what the media seems to be suggesting, Amazon's bid seems to be more like a last-minute bid trying to come in. So unless the details are known, you won't be able to comment. I'm frankly not surprised that there are multiple stakeholders having different views on the deal. Somebody who has come in much later may want to stay for a longer time and will go with a Walmart kind of a deal where it's not 100% sale, but they come in. But once you get somebody like Amazon in, it has to be a 100% deal, okay, right? Because Amazon is already in the market competing with Flipkart. You can't have partial buyout now and the balance to be later. So that becomes an important criteria, especially for late stage investors in Flipkart who would like to wait out, build more value, and get out, say, in 2 to 4 years' time, which is an option possible only with Walmart. With Amazon, it will almost be impossible because they will then be competing in the market.
Right. As you said, sir, if it's an Amazon equation, then I don't think, there is incentive either for the promoters, the Bansals or the CEO Kalyan Krishnamurthy to continue. That seems more likely if Walmart is in the picture. But the other important point that I really want to raise here is SoftBank has 23%. They are really the lone investor board member that was holding out for an offer from Amazon. Do they have enough rights? I mean, even if you can't give us specifics, can SoftBank have the power to, outbid or outveto all the others on the board? Is that a possibility at all? Would they have those kind of rights as far as the Flipkart board is concerned?
Yeah. So, see, typically, again, I don't know the specific deal, but the way it will be structured is they, they might have veto rights. So they cannot force Flipkart to accept a particular deal, but a veto right means the flip side works. That means they can block a deal even though they hold only 23%. Normally, later stage investors who are coming at a higher valuation may have individually the ability to be able to veto. In most cases, they will not have individual veto. A majority of the investors, majority of the last round investors will be able to veto, not a single investor. Again, I don't know the specific deal, but if the veto is there, they can veto. If the veto is not there, they will not be able to stop the deal. They definitely cannot make everybody else accept the Amazon deal. They can only block a Walmart deal, if at all they could.
Right. Final couple of questions, sir. We've spoken about two of the key players, which is Walmart and Amazon. It's interesting that Alibaba has been very silent about this so far, because last year there was this very strong buzz that SoftBank would perhaps bring both its portfolio companies, Paytm and Flipkart, together. That doesn't seem to have happened. And while this game is going on between two of the principal players, we're strangely seeing Alibaba being very silent, waiting out on the sidelines. I mean, can we expect a third bid to come through in this scenario?
Yeah, I know. Again, I would not be able to speculate on it because I don't know the insights. But even what you said about Flipkart and Alibaba, the shareholding is quite distributed. So I don't think one investor like SoftBank will be able to put together just because they want people to come together, because they don't own majority, they don't control. So I think we'll have to wait to see if Alibaba comes into play. I don't have any information on that. But beyond that, I don't think a single investor will be able to influence the coming together of the ecosystem or players. They definitely may have veto to be able to drag it out. But trying to construct a full deal, given the distributed shareholding and multiple investors in Flipkart, I would see it less likely.
Right. So, you are also an investor in Big Basket, which recently raised funding from Alibaba. And the speculation is that if Walmart comes into the picture in a big way, groceries will be a key focus area for Flipkart. What sort of competition do you anticipate there?
Yeah, so I can tell you from our point of view, the fact that grocery is the largest sector in retail market, and players like Flipkart and Amazon have made it very clear that they are going to be playing in groceries. In Big Basket, we do see them as players, as competition. I don't think Walmart coming in is going to increase the intensity or the intent of Flipkart or Amazon to get into grocery in any way. So we don't see any change. It's a large market. Big Basket has got huge first mover advantage and is the most significant player in terms of grocery. And the reason why Amazon and Flipkart have not got into groceries here and Amazon even globally is because it's a vertical. It requires deep domain expertise in grocery to be able to compete in the market. And unlike other e-commerce categories, this is you have to win the battle in every city. Across 20 plus cities where Big Basket operates, any player who comes in has to create supply chain there, has to create warehousing there, has to create go to farms, go to mills in each of the cities and fight each of the 20 battles separately, for which Big Basket has got a huge head start. Specifically, Walmart is not going to be able to help any player in India do the grocery market any better because it's completely India-specific, supply chain-specific market where international practices of Walmart is not going to apply. Having said all that stuff, we expect both players to be very strongly coming into groceries. We are prepared for that.
Right. On that note, K. Ganesh, thank you so much for joining us in this edition of ED Now Startup Central to really decode this deal and what impact it is going to have both on e-commerce and grocery in India going forward. But moving on to our next story, this is something that's making headlines internationally because it's going to be the world's biggest IPO in 4 years. We're talking about Chinese handset maker Xiaomi, which has filed for an IPO at the Hong Kong Stock Exchange, taking advantage of the new rules there. Now, people say that Xiaomi is expected to raise as much as $10 billion, valuing it at, believe it or not, $100 billion. That's the valuation that Xiaomi is expected to command when it goes public. This for a company that really had trouble scripting a survival story barely a couple of years back. But from then on, what a turnaround it's been for Xiaomi. And they're now giving all the other smartphone makers a run for their money. In fact, in India, they currently have at least 25% of the market share. So they've even managed to beat Samsung in the India market. Samsung, which for long has dominated the India smartphone market. For more details on Xiaomi's IPO, I'm going to go across to my colleague Rahul Dama. Rahul, what are the details? How much are they going to raise and what will it mean for India?
Yes, Xiaomi has filed for its IPO in Hong Kong in what's touted to be the world's largest IPO after Alibaba. Remember, Xiaomi is the fourth largest smartphone maker in the world, and also India is a very crucial market as well because it's toppled the toppest player Samsung really early last year, and those numbers have really upped their sales here in India. Remember, they have relied on flash sales, e-commerce route in the start, but have now looked at offline channels from exclusive partnership. They've moved ahead to offline channels, which will now go ahead and drive sales at about 25% market share now, and a string of launches to come up. They are confident that this will go up. But yes, all eyes on Xiaomi's IPO plans. It will take over the next few months for it to really materialize.
Thanks for that, Rahul. We'll take a break at this point, but come back with a very important story. Cambridge Analytica, the firm that was at the center of the storm over Facebook and data leaks, is shutting down and filing for insolvency proceedings. But is that the end of Cambridge Analytica? Is it going to re-emerge in a different avatar? And what does it mean for all the data that Cambridge Analytica already has access to? We'll find out more on all these aspects after the break. Welcome back to ED Now Startup Central, and as promised, the story we are discussing is about Cambridge Analytica, the firm that's been at the heart of controversy over data leaks at Facebook. Now, remember, Cambridge Analytica got access to user information of about 87 million people on Facebook, and it's now said that it has decided to shut down and initiate insolvency proceedings. Now, this is coming months after it faced ire from various stakeholders, and it's said that consistent siege of media coverage has made it unsustainable for really Cambridge Analytica to carry on, which is why they've taken this decision. But does that mean it's the end of Cambridge Analytica? Doesn't look like it, because the Guardian reports that Cambridge Analytica, the people who founded the company, have already listed another active firm called Immodata Technologies. This has been active for a few months now. It shares the same directors as Cambridge Analytica. And more importantly, what's going to happen to all the data that they have? For more details on this, I'm going to go across to Chinmay Arun, who joins us on the phone line from New Delhi. She's, of course, from the National Law University and is a very closely followed voice on privacy, data protection. Chinmay, thank you for joining us. What do you make of this decision announcement by Cambridge Analytica saying it's shutting down? I mean, is it just tokenism? What really happens from now on? Because Guardian says they already have another firm with a different name.
Yeah, so it's a I guess a great PR response of hashtag Cambridge Analytica specifically will not be available to you anymore. But really the question is what happened to that data set and what happened to the sort of practices that enabled Cambridge Analytica to create this kind of data and use it the way they did, right? So they're two separate questions. One is of the data set itself. Is there any kind of accountability? We should find that it resurfaces, that it's used again for other purposes. Who's going to be accountable? And the second is that as a broader question, other companies do this in other contexts, and has anyone in the world succeeded in responding in a way that will prevent the problem from happening again? GDPR maybe, but anything else, I don't know.
Okay. Anything else we don't know? And Chinmay, what we don't know here is what happens to all the data that Cambridge Analytica already has access to? I mean, who's going to decide what they do with that data? Is there some way, we ensure they've purged all that data? I mean, what are we going to expect here from lawmakers? Who's going to take the responsibility for this?
Exactly. And so you would expect that lawmakers take some action in creating accountability, but the firm itself, the individuals responsible, the question is that what is the method by which they could be held accountable, right? So you dissolve one company, you incorporate another one with a new name that takes away the attention from Cambridge Analytica itself. And then the question is, what happens to the data set, right? Even if the individuals responsible were to come forward and to say that, okay, fine, we commit to destroying the data set, what guarantee do we have that it's actually destroyed? Who's going to take responsibility if it should surface again? These are the questions we should be asking. Just shutting the company down is a PR stunt with limited use.
Okay. Chinmay, the other thing is that's right. What we've picked up from agencies is the Indian government has said, despite this tokenism of them shutting down and initiating insolvency proceedings, they will still summon Cambridge Analytica's, still seek answers from them. Now, considering the response from Facebook to India summons hasn't been that great, what response do you expect from Cambridge Analytica? Is there any way the Indian government can exercise any law to summon them, ask them questions about data leaks, data theft?
Yeah, in terms of cross-border enforcement of laws, there's no way in which the Indian government can physically make Cambridge Analytica come, right? At best, they can see if they can negotiate with the countries that do have control and see if these individuals can be produced. But it's a stretch. I don't see that happening easily. But I'm a little surprised that the Indian government is focusing only on Cambridge Analytica because we have a whole debate going on data protection laws about the kind of data that is being collected as a part of Aadhaar. And I would imagine that having seen the kind of risk that big data sets of personal information about individuals throw up, that the Indian government would also be actively thinking about strong data protection laws. So that's what I would like to see from the Indian government.
Right. Right. In fact, I was just coming to that. From what we understand, the data protection law, the draft is just a few weeks away. Justice Sri Krishna has spoken about this in the past as well. You've also given your inputs there. So do you expect the final data protection law to come up with some of these safeguards, taking into account the recent events around Facebook and Cambridge Analytica?
Well, I hope that it does, but honestly, the way in which the consultation was structured, I'm a little skeptical. One of our comments to the committee was that the manner in which the questions were asked, the kind of questions that were asked, that could really have been done better. Similarly, the consultation, especially the one in Delhi, where a lot of the privacy and data protection experts are located, it was held so early on that it was practically meaningless because no one had the time to do the kind of research that was necessary to engage. So, although I know that there is limited time in which this needs to happen, I also feel like the Indian government's really rushing with this. To give you a little perspective, the GDPR took over 3 years, and this is when Europe already had data protection regulations to work with, right? we're working with a completely different socio-economic system and a situation in which we haven't really had data protection principles like this before. And so for us to rush through it at this rate, to not engage with Indian experts, in any meaningful manner, I don't know what's likely to result from it. Like, even if you look at the consultation paper, you will notice that the citations from people in India who've been writing on privacy have been very limited, which is a little disturbing.
Right. Let's keep our fingers crossed, Chinmay, and hope we come out with a comprehensive data protection law that sets some sort of a benchmark for India, like what the GDPR has done for Europe. But thanks so much for joining us on Startup Central, and with that, we are out of time in this edition of Startup Central. Thanks so much for watching. Stay tuned to ET Now for more news and updates.